Hey guys, what's up and welcome to a new Tesla update video. So today let's go over the market as per usual, go over what has happened, what we can expect moving forward, and all of that good stuff as per usual. If you guys enjoyed, don't forget to hit that like button. It does help a lot. And of course, I am not a financial advisor. Make your own decisions. This is not financial advice. Do your own research, all that good stuff. But moving into it, straight into what happened, we have Tesla moving up with the market today. You know, a little bit of an arguable underperformance, if you will. Moving up only about 2%, while something like the NASDAQ, or I guess QQQ, was up 2.6%, which is quite a lot, right? So that's a pretty damn sizable movement for, you know, like the NASDAQ, right? That's a very respectable move to the upside here. So Tesla definitely a little bit of an underperformance in my opinion, but nothing, you know, nothing concerning, I would say, at least for the most part. But nonetheless, we did go up, right? And we did go up very close to my target, right? We currently went up pretty much to 186 at the high of the day, which is not too far from my target of between 187 to as high as like maybe 192, right? That's my main range. So, you know, with that being said, I do personally still believe that there is potentially more room to the upside. I really do. I still think that there is potential that we go up another maybe 3% or so. I don't think that is out of the, you know, I don't think that's out of the question. Let's just say that. However, guys, this is where, you know, especially if you're trading at all, this is where risk versus reward really starts to kick in, right? You have to look at it. Again, this is just my opinion. You know, don't follow it. I couldn't care less. It's just speaking out loud here, right? What you choose to do with it is your own, you know, decision or your own whatever. The point is the fact that, you know, risk versus reward here is, you know, you have to really pay attention to, right? Because again, assuming I'm correct, let's just say in theory I'm correct, and let's say, you know, give or take 190 is, you know, the high, and then let's say it can go as high as that, but not really much higher at all, right? Again, like that's about a 3.5% move from where we closed today, right? Well, what does that really mean moving forward though, right? You know, assuming this is going to be the high, that means that you're essentially risking on this trade a move to the upside of about 3% to what potentially could be as low, or I mean as big as, if you will, a move to the downside of maybe 20%. And that's, I mean, I don't know about you, but that doesn't seem very, you know, doesn't seem very favorable to me. Let's just say that, right? That seems like the risk versus reward there, at least, you know, in terms of more upside for the bulls, is really just kind of, you know, not really there. On top of that, the volume today, definitely quite damn low. We haven't seen this low volume really for like the longest time. It's ever since pretty much all the way back here in December, right? Like 3 months ago, roughly. Right, that's quite a long time that we haven't seen the volume this low on a green day. And what does that tell me, guys? Man, this just really screams of a dead cat bounce. It really, truly just screams, you know what? This is just nothing more than a dead cat bounce. Now, again, I want to make it clear, I still wouldn't be surprised to see a little bit of a higher move to the upside, but I really think that anything higher than this, like you can make an argument that we're sitting like this and we're about to just collapse underneath. You can also make the argument that it's actually going to be sitting more like this, you know? We still have one more high to touch, right? Which essentially would put us around that 190-ish level or get very close to it, right? You can also make this argument. But again, you know, regardless, the point that I'm trying to make here, guys, is that even though I am still, you know, not fairly, I would say fairly confident, maybe like it's 50-50, honestly, that we can still go a little bit higher and go up to 190. I don't think that's out of the equation whatsoever. The risk versus reward is just really not there, right? You know, so that's just the way I look at it. To me, all it seems right now is that if we do somehow get up to 190, that's just a much better opportunity to enter any, you know, maybe short positions, puts, you know, things like that. And then it is as of this very moment, unless of course it does break down from this, you know, this bottom line right here that I just put up on the chart, right? That's kind of the way I'm looking at it. But, you know, with that being said, you know, you take a look at the 1 hour chart and you can see the, you know, the RSI, it is essentially just following the stock, right? You know, it's not looking too bad right now. The RSI as of right now on this recent move is not screaming to me, we're about to collapse, right? Again, RSIs aren't always the, you know, the end all be all things, right? It's not, it's one of my personal favorites, but it's not, you know, the only thing that matters, I guess. Just because this is not showing something doesn't mean it won't happen. That's just, you know, of course you have to keep that in mind. But with that being said, it isn't at the moment, at least on the 1 hour chart, screaming that we're about to collapse, we're about to crash, it's all over. Just keep that in mind, right? But again, I want to make it very clear, guys, you know, this move right here to the upside is very, very limited, while the move to the downside is, in my opinion, substantially more open, I guess, right? Much lower, much more room to the downside than there is to the upside. So just keep that in mind. That's very, very important to understand. Now, we only have one more day of trading left, of course, for this week. So we'll take a look at the weekly chart after as well, very quickly. But going over on the daily one more time, you can see here as we move up, as we move into these technical, you know, I don't even know what to call them, technicals, I guess, whatever. We can see that, the Bollinger Band is, it did expand, but now it's kind of slowly contracting, very slowly contracting once again. Nothing too crazy, not like what we had over here, of course, but, you can see the green line is starting to point its way down while the red line is kind of just going sideways, right? So definitely, a start of some form of contraction here. So let's keep that in mind. And the white line is still above us, pretty much at 190 roughly, which I think, again, I still think that we can absolutely touch it. But again, I really would be surprised if we go much higher than that. And the upside from here is just truly limited. So, take that for what it is worth. We're also getting rejected by the 21 EMA right now. Ever since we really broke down below it, we did come up to retest it essentially today. We are getting rejected by it. That's not a great sign as well. We have the 50 and 100 day moving average, which it is a great sign that we are actually holding above it as of right now. So essentially, the way you want to look at it, I can't show them all. The way you want to look at it is essentially, whatever comes first, right? Do we break above this 21 EMA, or do we break below this kind of, 50-day / 100-day moving average? We're kind of sandwich in between the two, and whichever one really collapses first is going to be a really big tell as to where the next move will happen. And I personally put a lot more weight, in my opinion at least, on the 50-day and the 100-day moving averages than I do on the 21 EMA. I don't know. I don't put too much weight on the 21 EMA, but it's nothing to completely ignore either, right? But we're kind of sandwiched in between these technical, these technicals, if you will. So, it really just depends on which way we decide to break first, though I think even if we break above it, similar to what happened over here, we did, finally went below it, and it's like, oh my God, this is really bad. We did go above it for literally 2 days. And I wouldn't be surprised if something like this happens right here as well, right? Pretty much exactly this move right here, and then we just collapse down. Wouldn't be surprised if something similar happens literally like next. That wouldn't shock me whatsoever. So just, take that for what it's worth, ladies and gentlemen. Moving in, of course, we have the 5-day and the 5 and the 10-day moving averages, which we are actually above both of them, which, even further kind of makes me think that, move to the upside of 190 or so is still very much in play and is still very much in the picture. So just, take that for what it is worth, ladies and gentlemen. Over to the VIX very quickly. You can see the VIX is looking a little bit interesting, right? It's kind of, looking like it wants to do what Tesla did pretty much over here, right? Which is essentially just kind of zigzag sideways for a while, consolidate and whatnot. And I do believe this is overall going to end in an actual move to the upside, which I think was going to overall make the market go back to the downside. And I think the VIX is actually in a position right now where it's looking like it wants to get a bit of a bounce, which is of course not very good for the market. So we'll see how that actually ends up playing out. Looking at the very broader market extremely quickly as well. SPY, for instance, beautiful little rally today, but pretty good volume actually too on SPY. So I don't know, man. It's hard. I'm not really trading SPY right now because I truly don't know what to make of it right now. I really don't. I really do not right now. If we ever get to 400, I'll probably enter puts, but other than that, I'm just kind of sitting on the sidelines for the most part, to be completely honest, at least for SPY. And for Tesla, in case you're wondering what I'm doing, I did close out some of my cash secured puts that I sold over here. I still have some left, and I'm just kind of letting them ride out, honestly. I have some for next Friday and some for the following Friday that, they're pretty much between 180 and I have it right here, between 180 and 175. I have a few. And I'm just letting those ride out. If I end up having to buy shares, it's fine. I have substantially more cash secured puts to sell, especially now that I, closed out like 4 of them or something like that today. I had a pretty much a 50% profit on average, I would say, across them, which, is not as high as I wanted, but I don't want to take any risks either. I'm a very risk adverse person lately, or at least, for now, especially in a market like this, because I've seen, and it's happened to me before too many times, where people are just simply too YOLO, for lack of a better word, and they just get absolutely just bagged, like just utterly bagged, like just hardcore bagged, right? And I've been in that situation before, and I don't want to be in it again. So that's just the way I look at it. That's just my thought process. That's just how I do it and whatnot. And the last thing I want to look at is, of course, the RSI on the daily. You can see it's just kind of following right now. It's really just following this little bounce. It's nothing too obvious, or nothing bullish. If anything, it's more bearish than bullish in my opinion, of course, right? We are touching the median here, and I do think that if there is a place to reject, it's pretty much more or less right around this general level, with potentially a little bit more room to the upside still. So that's essentially what I'm seeing, guys. Let me know what you think down below. Again, TLDR, the easiest way to think about it is that we're just simply creating either a bear flag and or a dead cat bounce. It's not looking the brightest. It doesn't look like it wants to, collapse just yet. It looks like it might have room to the upside a little bit more, but I wouldn't bet on it. Let's just say that, right? You know what I mean? I wouldn't bet on it. The room to the upside is limited, while the room to the downside, in my opinion, is substantially more open here. And yeah, that's kind of the main thing I'm looking at right now. And of course, it doesn't help the fact that we are on pretty much the lowest volume we've seen in the last 3 months on Tesla right here, right now, which isn't great. And that's not really helping the case that this is nothing more than just a simple dead cat bounce. So yeah, thanks for watching, guys. Let me know what you think down below, and I'll see you tomorrow. Peace.